Hello guys. So I'm recording end of market review. So like this is the last part of the day, which is basically journaling the trades for today or the trade for today because it's just one trade. But first of all, let's start from the monthly as usual. Monthly time frame. So for the month of April so far, we're still bullish, right? Price is currently sitting at 2016 500 thereabout. Have equal highs at 2075, 2077, 2080, right? So that's our drawn liquidity 2080. Price currently at 2016, which means we still have about, from where price currently at, we still have about 600 pips, right? Or more than, that could be 6,000 pips. But yeah, dropping down to the weekly time frame, obviously you can see price still bullish, still remaining bullish. We still have this imbalance on field, draw liquidity to the upside. So today was CPI, right? So we had CPI today, and we can see the market was very choppy today. If I drop down to the 4-hour time frame, we can see price was trading around the new week opening gap high, right? So this is the high of the new week opening gap, and this is the low of the new week opening gap. So we saw price drive into this high multiple times today. We can see during CPI was the first time price had like this aggressive move to the upside. Let's drop down to the hourly so we can have like a closer look. So you can see where price made this equal highs, right? Price made this equal highs here. Got the first point here, and the second one here, right? So price created this relative equal highs, made the retracement back into the new week opening gap high, and then during 130, this was during CPI release, price made this aggressive move to the upside, right? Took out buy side liquidity. What's above here? Buy side liquidity, right? Let me put that center. Boom. Buy side liquidity. So this was the perfect raid on buy side liquidity, and then price came for sell side liquidity. What's below here? Was below this lows here, right? Sell side liquidity. So I'll just say SSL, right? So remember, price offers buy side liquidity, also offers sell side liquidity. So now, where's the new drawn liquidity going to be? If we're seeing price going to the upside, we have new buy side liquidity at this swing high, and you can see this is like relative equal highs right now, right? So these are like relative equal highs. So have buy side liquidity above this swing high and above this swing high. So price has offered, has taken buy side liquidity, taking sell side liquidity. We are still within this new week opening gap, right? You can see where we did the new week opening gap, right? So price is using this gap as support, as a support level, right? And we're seeing price currently trading up today towards this buy side liquidity and this buy side liquidity. Now let's drop down to the 15-minute time frame. Let's have like a closer look. Okay, so you see this fair value gap here. This was the midway of this fair value gap, right? This fair value gap, this was the midway Obviously, price went below that, came back above that, above the fair value gap, retested it using it as support, right? And then we're seeing this continuation to the upside. So I'll be expecting to see price maybe continue higher. But as I said, always, as I'm always saying, like, there's no need to try to predict, right? There's no need to try to like predict where price is going to head to, because we don't need to do that in order to make money, right? So we're just keeping up with price action, and the most important thing is being able to call out the levels of liquidity and imbalance, right? Knowing where the buy side liquidity is, knowing where the sell side liquidity is, knowing where the gaps and the imbalances are. Then you let price do its thing, and then you can follow up. You can read price action, right? So that's that. Now to go into the trade of the day, let me take price back to our entry time, and let me drop down to the 5 minute time frame. So obviously today was CPI, so we had a lot of volatility in the market during the trading window, right? There was a lot of volatility in the markets during that time. Now, initially, I wasn't supposed to take any trades today, but yeah, I don't know. I'm trying to make that a part of my rule, but I think NFP is the. I didn't trade NFP last month, right? I didn't trade NFP last month, or did I? Yeah, but according to ICT, right, like trading high impact news is equivalent to gambling. So today I would say like I broke an important rule. Let me put that in the text call out. Here, let me put that here. And let me be like broke the rule today. Traded high impact news. Alright, let me spread this out a bit like this. Okay. Yeah, broke the rule today, traded high impact news. Right? Because basically it's more of like gambling. Because the reason is you could have your stops in place and have your targets in place. But let's say price gets so volatile, right? And you see a move like this, let's say it moves in your favor a bit, and then it runs your stop, and it runs your stop so quick. Um, Let me delete this and do it again. So let's say price triggers me in, moves in my direction, and then runs my stop, right? And let's say price runs like, and you know I'm trading gold, so let's say price runs like 100 pips away from my entry, right? 100 pips away from my entry. Now I have a stop placed here, and let's say the broker doesn't trigger the stop and it gaps, right? So this move like this could potentially end up like blowing your account up. Like if your broker doesn't actually pick up on your stop order, right? Let's say price just moves so aggressively in the opposite direction, right? This kind of move could end up like blowing up your account, and your broker is going to tell you that that's just slippage, right? So in most scenarios, even if it doesn't end up blowing your account, let's say you've been trading for a whole month, and then something like this just eats away all the profits that you've made, right? This single one trade, this one mistake eats up all the profits you've made for like the whole month, right? That could be very, very devastating. So this is the reason why trading high impact news is not allowed, right? So we've put that down, broke the rules today. So today I executed the 15th trade, right? This was the 15th trade, and let me just play price forward. Obviously, this wasn't even my entry on this candle, right? When price tested this entry, this was like 230 on the dot, and then price pushed down here, and I was like, okay, if I was going to get a re-entry, so I just needed to wait for like a re-entry for this one, right? Go. I was looking for price to come tap back into this fair value gap, and then drop down to continue to the downside, right? Very simple. But at this point, I thought I'd missed the trade, right? I thought I missed the trade. I thought price was just going to continue to the downside. I did not engage the trade here. I did not engage in this trade at this point. I had to wait to see if price was going to come back to give me a re-entry, or if this was going to be a missed trade. Yeah, you can see where price pushed back, gave me another entry, and then that was the entry I took, and then price just died. All right, from this point, price just pushed the downside, and price still gave another entry here, right, before continuing to the downside. So this was a trade for the day, mid 2 hour, and yeah, broke the rule today, right? Broke a very important rule today. So this is what the takeaway is. Actually, the takeaway is not the outcome of the trade. The takeaway is the fact that we broke a rule today, and we also have like high impact news on Thursday and on Friday. So I think we have PPI. So I don't think PPI is news that I should avoid. So I'm going to trade tomorrow. Then I don't know FOMC. I don't know if I have FOMC tomorrow or next tomorrow. But FOMC is not during my trading time, right? The news release is not during my trading window. CPI was 130 and I didn't trade during 130. My trade was during 230, right? So in a kind of way, I didn't really trade the high impact news, but I traded on the high impact news day because we also have FOMC. We also had FOMC today. So same thing with PPI, right? Same thing with PPI for tomorrow. I'm going to still be able to trade because it's not going to be around my trading window, but it's on the same day. So if I have any news release during my trading window, then I'm not going to take that trade. So I think that's the scenario I have on Friday. So I'm not going to be trading on Friday if that's the case. But I'm going to be trading on Thursday if I don't have any trades within my trading window. So today was very choppy. Today was very choppy. We saw a lot of back and forth, back and forth. But in general, let me take that back. But in general, we kind of understood what was going on, right? You can see big bearish candle, big bullish candle, big bearish candle, another bullish candle, and yeah. So a lot of back and forth today, but overall, we know where the higher time frame is pointing to, right? We know where the higher time frame is pointing to. We're looking for the draw on liquidity on this high, on this buy side liquidity. So buy side liquidity, and possibly to see price continue to the upside, right? So that's that, and yeah, that was a trade for today. So currently executed 15 trades, 8 wins and 7 losses, right? 8 wins, 7 losses, currently up 9R, and I have just 5 more trades to go. So by the end of I think next week, possibly by the end of next week, I should be done with this exercise. Then we can conclude on the results and then move on. But at this point, we've already ended up being profitable because being up 9R after 15 trades and having 5 trades left, even if we end up losing 5 trades in a row, right? Even if we end up losing 5 trades in a row, that's still a profit of 4R. I'm not saying we're going to end up losing 5 trades in a row, but that's just to say that okay, we've proved that this model is actually profitable, because even if we end up losing the 5 trades that are left, we'll still end up with a profit of 4R, right? So 4R at this point, being able to walk away with 4R is not totally bad. Risking 0.5%, that should give you 2%, and risking 1%, that should give you 4%, right? But that's still not the outcome. That's still not the outcome yet. But like, this trading model has really like, I would say, exceeded my expectations in forward testing, because back testing is different from forward testing, right? Back testing, you can look at price action, you can like hesitate a bit, get another entry. But when it comes to forward testing, you have to actually, your reaction time has to be faster, right? Reaction time has to be faster. So that's that. So after the next 5 trades, then that's a complete set of 20. So once we complete the set of 20 trades, then we can move on to conclude. And after the conclusion, then we can move on to the next phase, which will be live testing. And live testing is where all the emotions will start to come back. So that the psychology is going to play a big role in that, right? Psychology is going to play a big role in that. But we're just going to keep documenting it, journaling the trades day by day, and going over it. I think that's the importance of journaling. That's the importance of journaling the trades, because then you have to know the emotional states before and the emotional states after, right? Going into the next day, what's on your mind? Are you trying to revenge trade? Are you trying to make your money back, or are you just going into the market as, another day in the market, right? So for this rule, I'm still 50-50 on this, right? I'm still 50-50 on this, because the high impact news was 1:30, but our trading window was 2:30, right? So that was 1 hour after the news. So we didn't really trade CPI. We didn't not really. We did not trade CPI, right? I did not trade CPI, but at the same time, this was a high impact trading day. And just following some ICT students, they don't place trades at all on those days, right? They don't take any trades on those days at all. So I don't know if we got lucky, right? I don't know if we got lucky today or what, but that's something I really need to consider, right? If I'm going to scrap trading days like this, or yeah. So that's just it, and this is the end of this video. So this is end of market review for the 12th of April, right? So tomorrow will be the 13th of April, and if I do take a trade, then I'll definitely journal that. And if I don't take any trades, then I would not journal that, right? Very straightforward. So see you in the next one.